What is up, guys? Welcome to the 40 Finance channel. Talking stocks today here on Friday, August 20th. And I don't know about you folks, but I've had a rough week in terms of my smaller cap stocks. I don't know if they're all like officially small caps, but when it comes to, let's see, Paysafe, Magnite, Sabre, Rocket to some extent, and what else do we got? Probably one I'm forgetting in there that I'll remember here in a second. They all got blasted. So the smaller cap stocks that I own have all gotten blasted. And the bright side of all of it is none of those names I just mentioned were overweight, if you will, in my portfolio. They were all smaller positions, couple $1,000s. And hey, Andrew, how you doing? Thanks for typing in the chat. Make sure it works because I screw that up here and there. So I actually have a lot of decisions to make on those names and what do I want to do? Do I want to just capture the losses? It's really given me a bad feeling on small cap stocks in general, but I'm trying to be patient. I'm trying to think about, what are the goods and bads, because obviously when this stuff starts to happen, it's easy to think in terms of momentum and like, geez, these are all going down. What am I going to do? So I'm being patient with and Andrew is staying on Corsair and SoFi, all those names. I know, like, since you said Corsair with Jeremy from Financial Education, I think he was big. His videos have been his tattoo chef dropping so much. So I'm not the only person. The question is when do you get out and when do you hang on, right? So the one move I did make today, or excuse me, the one move I did make this week is, at least for now, I dropped my Paysafe. It was one that, let me bring it up here. It was one that I was actually very excited about as a counterpart to my DraftKings stock, since they do a lot of payments in the sportsbook space, not only in America, but internationally. But guys, my cost basis, even after a recent lower addition, my cost basis was like $13.50, and it's at $8.28. So averaging down from that level, give or take, just I guess 40-ish% off the top of my head. You can't average down that far unless you're planning to hold for a long time. So what I did is the same thing I did when Enphase and Unity got hit, is I just booked the loss and I'll look for another time maybe to get in it. The killer with Paysafe that made it a little easier to get rid of it was just their growth rate has not, I expected the projected growth rate to increase. That was my sort of bullish thesis, right? Because of sports gambling and all the reasons that I own DraftKings. But analysts are still only seeing 10% next year. And you basically dropped 40% off the stock price. You're still telling me 10% next year. You go through the earnings, they're saying 10% next year, and there wasn't a lot of stuff in the earnings that A, I didn't already know, and B, that was some sort of shiny object that might get us out of this mess. They made an acquisition in Latin America, I believe, but it was kind of nickels and dimes as far as like the 1 year impact. So I was disappointed to sell Paysafe. I don't really care about the loss because it all kind of works itself out in tax time. But it was just disappointing, I guess. But Paysafe is a good example of what I have to think about for now multiple stocks. And we'll go through them, and they're probably comparable to what you guys are going through on your small names. SmileDirect, Tank City. I'm at what I thought was the forever low of $7-ish. they just ho-hummed their earnings report again. I did a recent video on it. Now I'm only $2 off on this one. So there's a chance I could do something here and maybe sell calls against it, maybe average down. I'm still thinking about it. Their growth rate has been pushed back, but it is still in, 17% this year. This should be a 30% though, coming off COVID year, and plus 21% next year. So, and inching towards $1 billion. Now, they have just literally bored us to sleep on the earnings reports and the excuses, and the things are just, not getting to where they need to be. So I'm sort of stuck on this one right now. I'll make the decision later. I could book this loss at any time and feel okay about it. But I think sadly I'm going to bag hold it and give it maybe one more quarter, maybe one after that, only because the opportunity is big. Paysafe isn't showing right now that their opportunity in the 1 to 2 year time frame is massive. And that was a major oversight on my part. But SmileDirect does have an opportunity. Will they actually capitalize on it? It's hard to say, man. It really is. All right, I'm going to cover 2 more, and then I'll do some questions here. Magnite, another smaller, you're talking about $3 billion market cap. I think that's technically a mid cap, but they're year to date. So this is kind of plays on the other side of Trade Desk in a good way, not against them. Trade Desk sells advertising to advertisers and advertising agencies. So they're like a traffic, sort of like a stock market, right? And Magnite partners with the inventory side. So they make a partnership with Disney as a big client, and they have several other big names. And so Magnite controls their ad inventory and goes out to places like Trade Desk, other partners, tries to get the maximum amount of money per unit, right? So they're making big acquisitions, and they've sort of tripled their company here in the past year. The weakness in this stock, I think, is unfounded. However, I'm in the $31, $32 range, and now we're down to 25. So I really have to sit and read through Magnite again and figure out 2 things that's hard on this one. Slightly overvalued. You can even make the argument that it's slightly overvalued at 25. So in my opinion, market correction, this one could go down even more. So do I wait for that to double down? Do I double down today? There's a lot of different possibilities. I'll show you very quickly. They're non-GAAP positive, so they are starting to turn a small profit. But even if this number was $1, right, which it's not, if it was $1, you'd still be at 24x. Now, on the revenue side, this is a huge year, but that kind of is a COVID thing, as well as the acquisitions. Next year's plus 30%. We all know where connected TV is going. It's just hard to tell if I need to do something with Magnite now or just wait. I'm kind of feeling myself through that. All right, last one. Let me see. What's the other one that's bugging the crap out of me this week? Oh, yeah. Sabre. This is a reservation system widely used across travel agencies, hotels, most exclusively in airports to run air traffic. Very interesting story. Even if you're not interested, you should read about the company because it's kind of cool. Tanked out of nowhere. Tanked out of nowhere today, 8%. I haven't seen, well, here you go. I was going to say, I haven't seen what the heck is the problem. Let's see what Motley Fool says. kind of dull, blah, blah, blah. As the company explained in its sales perspective, this will be an at-the-market offering. Oh, they sold more. Down 8% after the company announced plans to raise up to $300 million in a new. So we have a dilution problem here. While Sabre says selling its shares as part of its current plans, it may not proceed or may not sell all of the 300 million shares. Okay, so it's a dilution game. I'll just have to study it more. Very hard for me to do that spot analysis. I'm going to have to take a look, by the way, in my world, how much does a share dilution affect earnings per share, price to sales, all the things that matter, and see if the bull case is still there. Quite honestly, travel is not even close to par. So when travel gets to par, as far as volume, Sabre should eventually get back to $15, $20 a share. But travel, as you guys know, with Delta and what we're seeing in some of the different countries who are still on lockdown and yada yada, it looks like travel pace has been pushed back. You know, my guess is the travel story that we thought we were going to be done talking about is suddenly, from an international perspective, pushed out to maybe next summer. So Sabre got a little bit of an ass kicking from that pushback, but there's a side of me that says, hey, I'm not in a hurry. It's not that much money as far as like what I have in it. Let me check real quick. Sabre, you know, it's only $2,000. So I'm not saying I like to throw $2,000 up in the sky, but if it's just a waiting game, I'll probably keep waiting on that one. And then lastly, my good friend Rocket. You know, the thing is with Rocket, and you can see it's just basically run flat. I am underwater to the tune of about $1.50 a share, maybe $2 a share. I've come to grips with Rocket, and I'm staying, okay? So, and the reason that I'm staying with Rocket is because I really believe, first of all, they're already number one in mortgages, and I really do believe that they'll continue to increase that lead as years go on, 3 to 5 years, and they have already demonstrated one of the rebound cases that I wanted to see out of them, which is we need to ramp up our mortgage origination on new home purchases, not just focus on refinance. Refinance, currently a small drop in the bucket for them, refinance, big part of their everyday sales. Now they're getting into new homes. It'll start small. I'm hoping it gets big. I feel okay about Rocket. The lawsuit gets a lot of press about potentially hiding some numbers to get a stock sale, an insider stock sale. I don't know. I'm just not super scared about that, mostly because a lot of stocks get that. A lot of stocks. But we'll see what happens. I'm holding for now. All right. Switch gears. I'm going to take a drink, and then I'm going to answer some questions. Let me know what you're getting kicked on. Caleb is debating selling PayPal. Now, I have no plans to sell PayPal. The Baba is also interesting. And you know what Alibaba's come down to? No one on the face of the planet would argue that this is theoretically one of the best deals on the market. Rarely are you going to see a mega cap stock that's basically an Amazon equivalent with a slightly different slice in terms of being also a wholesale marketplace. The question is that only you can answer as an individual is, what do you think happens in China? You know, they've basically come out and said capitalism sucks, individuals getting rich is not what we want. We want to spread that appreciation of what our country has done with the 10 cents in Alibaba's. We want to spread that wealth, redistribute it through our country, and if we have to make regulations to do that, we will. I sit on the side of hard to own stocks in a country where capitalism is frowned on. That's just what I'm going to say. And I'm not saying that Alibaba is not attractive. So start with that. I didn't get my drink. Andrew got crushed on Baba. I don't know what you do though, Andrew. Like, let me try to think of it from my world. If I owned Alibaba, which I do not, let's just say I bought it in January at $240, January 5th, it was offered for that price. God forbid I bought it at $270. I've lost $80, give or take, and the fundamentals of the company are just unbelievable. Look at this EPS growth, sorry. Look at this EPS growth, $10 to $62 to 73. Now keep in mind, one thing that could really muck this up a little bit is whatever fine China puts on this company. So if it's in billions of dollars, this EPS could certainly go down. But either way, your comps are incredible. Sales perspective, where are we at on sales? Sorry, guys. Plus 700% this year. Obviously, some sort of COVID comp involved. Next year, plus 20%. Historical valuations. Today, and we're only going to look at forward PE like I normally do, you're 19. I think when I did the video, I was surprised to see this. The 19 is definitely cheaper than 2016 through 2020. Oddly enough, there was a time in March that it was a little tiny bit cheaper. PEG ratio has gone up. Price to sales, definitely lower. I don't know. It's like I said, the fundamental case is outstanding. I just don't know if I trust the China element anymore to keep it. It just depends on what your other opportunities are. Let's take a look at TipRanks to see. Here's trying to get the dates in here for you guys. 16 days ago. So definitely have come in the past several days, and you still have strong support by the folks who are in it. 300, 280, 250. Now, what did I say? I said if I bought it in January, it was roughly 240. So this 250 is 57% upside, but it's really barely over par from January. So I guess it just depends on when you got in. I know for me, if my cost basis was relatively close to today's range, let's say my cost basis was 175, stock's at 160, I would probably hold. I probably would hold because of how strong the fundamentals are. If I was way underwater, I don't know. I don't know if I could risk losing more, but it's an individual's choice. All right. Let's see who else we got here. Kayla bought his first shares at 161. We'll double up to 143. This is Alibaba. Nice job. Chris, finally some relief for Corsair. Tattooed Chef and Coin, needed that. Yeah, so that's how I led this off, Chris. And I don't have the 3 stocks that you mentioned, but the ones that I'm having pain with, it's been a terrible week. Out of curiosity, for Tattooed Chef, haven't looked at this one in a while. Let me bring it over here. Obviously, I'm a fan of financial education channel. I like Jeremy. He picks different stocks than I do, but I mean, you gotta give the guy some credit. He has definitely overperformed in the past couple years. Year to date, if you bought Tattooed Chef in January, you got it at 23. If you bought the dip, it was 16, bouncing off 16 right now. This is a long-term hold, and I think Jeremy is, the videos that I've watched, so I don't watch every single thing he does, but a couple of videos a week I watch, and I think he's been pretty clear to most folks that Tattooed Chef is long. It's a long, long hold, and if you're playing that game, I think your best bet in this one is a buyout from big food company, right? Some sort of Heinz buyout, or whoever's the biggest food makers out there, because this little hamster is doing great, plus 61%, but we're still talking about not even $500,000, right? Next year, not even $500,000, plus 35%. So yeah, I think Jeremy is being fair. This is 3 to 5 years now. What would be awesome is if a big company just came and swallowed it and you got paid on the upswing for that. So I do think that there's promise in this one. It's a little too small for me, especially after what I've been going through this week. I'm just about done, I think, temporarily on these small caps. I just think that there's so much more opportunity in larger caps. Haven't looked at Coinbase in a while either. I like the theory of owning Coinbase as a general crypto play. I just can't, I'm not smart enough about the industry to know what happens if their transaction fees finally catch up with them, because we all know that there's alternative ways to do it without the same fees. That's the hard one for me. But from a revenue and profit standpoint, Coinbase is pretty awesome. I mean, they generate some serious cash for a company that's this young. I mean, the recent projection is almost $10 a share. Make sure that if you are in Coinbase, though, I would use this number going forward, which is, they are expecting a decline in EPS, right? And we're almost at the end of 2021. So looking at 2021 now isn't necessarily the best thing to do. If you're long and thinking about adding shares, go for this 553 or calculate your own, because that, as soon as you wake up in January, if not earlier, every analyst in the planet is going to be using 2022 projections. So that's just a free tip. And the sales are not, this is supposed to be a great year. Next year, maybe not as good, right? So no projected limited growth next year. Excuse me. But I like Coinbase as a stock market play to avoid buying crypto for whatever reason you don't want to buy crypto. All right, Enrique Felix, Star Surgical. I don't know that one, and I don't do much with medical, so I'm going to skip it. Calm Me Now, buying Baba at 214 instead of here. Okay, so I think the point of that topic or that comment was I will buy Alibaba when it starts to show some rebound, and there's nothing wrong with that. Malik says, I manage Yahoo Finance and throw what you see in our product. I would love to learn how we can improve. Absolutely. I'd love to talk to you too. So on my page, Mr. Malik, is my email that you can see. I can't bring it up because I'm in the middle of this stream, but I do have an email on my YouTube page, and I use you guys all the time, and I use the premium version. So please do reach out. I don't know if I have a way to contact you. Let's see. Would you swing anything right now given current market sentiment? Would I swing trade anything? If I did, I have enough stocks that are down on small cap land, but I'll show you something cool, or at least I think it's cool. Let me make an adjustment to my screen here. So speaking of Yahoo, if you go to, damn it, if you go to Yahoo, you should bookmark this. So you see how I'm at finance.yahoo.com, right? /losers. Sounds funny. I'm not making fun of people. This, I look at this every single day. This is, and I'm going to fix it so you can see it better. These are the biggest losers of the day. And what I like to do, sort by market cap, okay? And then off to the side, if I squeeze this in, probably going to make the text too small, but you'll get the idea. Off to the side, you have TTM P ratio, trailing 12 months, and you have a 52-week range. So what you can do with this list, granted it changes every day, is kind of eyeball where stuff's been over 52 weeks, and let's just say this snowflake here, you see the high was 429. I don't have snowflake, so ignore me if it just got some terrible news of some kind. But it's down 6+%, and on this level we can see that at one point it traded at 429 in the last year. Maybe there's upside, maybe not. That's when you have to go into the next phase. Let me try to find something I do know. Ross stores, How about, well, here's an interesting one. Robinhood, not going to have a lot of fundamentals there. They're down 3.5%. That's traded as high as 85 somewhere along the way. Not a stock for me, but, you know, something to look at. I'm going to go back to Ross stores because they do have fundamentals that are more in tune with the way I look at stocks. I'm a TJX stockholder, they just crushed their earnings, but now, of course, everybody's worried that stores are going to close, so yada, yada. Ross stores, 123. They didn't lose much, 2.63%, but it was enough to make the leaderboard here. Ross stores high is 134. I know from owning TJX that TJX is getting back some action. Let me try to drag this out. Let's look at our year to date. A little choppy. High in April, recent high in August. Let's take a look at the analysis. 78 cents. This year they'll hit 435 if they hit their estimate. So 435 divided into 123, right? Gets you about a 30-something. And then next fiscal year into the 5. So they could add another $1. And this is pretty far away. It looks like their fiscal year probably does not align with the calendar. They could just now be in fiscal year 22, or they could now be in fiscal year 22. I'm not sure. But let's take a look at our growth numbers. This year, probably an easy comp at 45% because of COVID closure. 7%, not super hot. I like to see double digits. Let's look at the trend. EPS trend. 90 days ago, 422. Today you're at 435. 90 days ago, 511. So it's going up, which is a positive. Now, it's not a huge discount, I wouldn't say. And it looks like there's some volatility big time over the past month, but it's at least one that you could maybe come in here, take a look at the 6 month, and you could identify a price target. Like if Ross started slipping, which it has, We know it hit 115 recently. It does look like they had an earnings report since then. Let's see what the we got earnings call 19 hours ago. 7 hours ago, raw stock falls on weak Q3 outlook. So you could potentially take that knowledge on the losers chart and turn it into a price target, right? So remember this. It's fun to look at. God dang it. Every time I have to adjust my screen so you guys don't have to see all that crap up top. Finance Yahoo / losers. The flip side is gainers. All right. I'm going to get all the crap out of your way again. Sorry, I have to do it kind of manual. Then, so let's see what our gainers are. We'll squeeze in, same exercise, different way of looking at it. Scroll down. I like to sort by market cap because you're going to get a lot of dink and dunk stocks in these lists that are irrelevant, at least to me. We've got Tencent. That's probably good news for you Baba holders, that Tencent is making a bounce. And look at this dog, 53 off of 99. So it looks like they went to a new all-time low. Now they're bouncing. There could be a game in there. Nvidia. So this is one that I probably wouldn't buy, not because of Nvidia, but just looking at this. Oh, shit. Sorry, guys. Gainers. Here we go. Tencent. This is the one I just talked about, but forgot to put it on the thing. 56. You see that it's also still at its low. Get a quick P ratio. Nvidia. This is one that I wouldn't buy, as I started to say, not because of the company at all, just because of where they are with their price. I mean, this is the highest of the high, right? You're up 4% on essentially a couple bucks off your 52-week high. That would not be a buy opportunity for me. And you get the picture. So hopefully you guys like that. Did Unity go up? Well, Unity went up again. I don't know if I'll ever be able to get back in that. Plus 4%. I am targeting Unity under right about $100. I would like to get back in it. I think it's a good company. I got spooked on some stuff and bailed, but you know, whatever. I'll give you a preview too. The video I just recorded that'll come out this weekend. This is my most recent purchase, Zillow Group. Coming off of a, you know, not quite a 52-week low, but getting there. And as a stock I watched for a long time, I decided to buy it, and I'll make you wait for the video either Saturday or Sunday. All right. Call Me Now is jumping in snow. We talked about snow just for a minute. I don't totally understand snow. And I'm in Palantir. They're not one for one. They're totally different applications, but of course they get lumped into the software game. But when I did research snow several months ago, and these companies change so quickly, is that Snowflake offers some very important utilities in the cloud. I personally didn't see a huge moat to it, which is why I didn't explore it more. But I do believe the price has come down significantly since the IPO, so I totally can see why you might be interested at this level. Caleb, I think he's answering. Risky position that could pay off huge. Talking Alibaba. I wish I could find a good Chinese investor I could speak to. It would be nice to get their perspective. I agree, and that's always been a problem for me with Chinese stocks, is like, you know how we have Reddit and we have the social media that we have? It's really easy to check up on a company. So SmileDirect, right? I've done a ton of consumer research on SmileDirect as far as, are people happy? What about the ones that aren't? You know, et cetera, but I can't do that with a stock like NEO, for example. I have to listen to other people talk about it, and I don't like that. Not that I don't believe them, but you guys know there's a lot of pumpers out there, and I'm with Caleb. I wish I could also talk to a Chinese investor. John Spencer, snow down 10%, no reason that I can see. I think that there's other people would agree with you. TTCF is doing great. I like it. I don't see anything wrong with that one for the long term, but if you thought it was going to $100, you're probably smoking crack. Maybe in a different situation, but if it's just them grinding out their business, there's no $100 for that stock that I can see, unless, of course, it gets pumped, right? And then if it does hit $100, I recommend selling. After you mentioned Rocket, it went down. I have that way with Rocket. I certainly do. Rocket went up. If you guys weren't here, if you're just sort of new to the channel, Rocket got a pump to like 40 one day, and I did a live stream, and everyone's like, what are you going to do? And I was like, well, it's the end of the trading day, and it's at 40 with strong support. I was like, I guess I'll just wait till tomorrow. And, you know, maybe it goes to 50. So AKA I got greedy. The rest is history. It came down almost immediately. I mean, I think the next day it dropped right back to like I was a couple bucks off. So whatever, shame on me. I'm okay with it. It's a good company. It's not like they're making, you know, fake items or they don't have real revenue or EPS. It's just going to trade a lot slower than I thought. Hood for a swing. You know, I think with Robinhood, any given day, because that's in that zone of younger investors, Reddit world, whatever you want to say, you could wake up any day and I could see Robinhood gaining 25%. I think the one little caveat that they have that I hope they're working on, I don't know the company very well, but they could launch some stupid feature, or not even stupid, they could launch a new feature and that stock will go to the moon because everybody on the internet will talk about it, right? So let's say they did some stuff like SoFi, right? Lending or whatever. I'm making this up. People would just take that story and pump it to the high heavens. So yeah, Robinhood for a swing. I have no evidence that that's coming, but it also would not surprise me. All right, Jeff, I manage Yahoo. How can we improve our product? I would not going to bore the people with that. I'm happy to send an email to you, but I certainly have ideas. Call me now. Are we to thank Jack Ma for Baba Dismay? You know, there's another bull case. That's a good point. That is a bull case of, what's it called, of Alibaba that I never really thought about till you just said that. If he comes out of wherever he is and makes a triumphant return and puts on a PR show, then Alibaba's bumping big time, big time. Now, what are the odds of that? I have no idea. I don't even know where the guy is, and there's obviously funny speculation stories about that. But it's a good call from Call Me Now, in that Jack Ma comes out of the woods and says, I'm here, the world's saved. Baba shoots right up. It's got the fundamentals to shoot up high. It's just what side of the coin do you buy into? I'm on the a little bit half empty. I don't like that the country hates capitalism because I think that that's a barrier to a stock price's appreciation. However, on the bull side, you know, fundamentals are strong. Jack Ma could return at any minute. Also, we don't know if in the Chinese government, is this just a smackdown? is this like, wake up everybody, you went too far. We're smacking fines, pulling stuff away, and then say a few months from now, they're like, okay, we smacked the hand, you know what the deal is, now let's go back to growing, but here's how we're gonna do it. And if they release that, BABA stock blows up. When you have the fundamentals to support it, the risk reward certainly goes down. It's just one of the weirdest unknown circumstances I've seen. All right, everybody, it looks like got all the questions in. Last peek at the market here. If I fix the screen. So we got S&P 0.68, one of the best days, I think, this week. Dow, NASDAQ at 1%. This one is big. Russell has been an absolute turd here over the last few days. Let's do the 5-day. I mean, gee whiz. So Russell bouncing back is good. It's good to see some buying action. My outlook for stocks in general is still strong. I guess I just worry, for me personally, on small caps, Russell stocks, if they're being held up by an insane volume of money being in the market, what happens when people start pulling money, right? What happens when stimulus runs out, people trade in their Tesla shares and lock in their profits and just take the money to live their life and pay for things and buy a house or whatever? I do worry a little bit about money slowly leaving the stock market. On the flip side, on the bull side of that argument is everything China just did, every China mega cap, there's got to be a zillion people who said, sell Bava, sell Tencent, sell Neo, I'm done, I'm putting my money in American stock. So the Bava story had to be good for the American stock market, or American stock tickers. I can't imagine it wasn't. So it's interesting, but anyhow, appreciate everybody for stopping by. Hope you enjoyed this, and I'll have my Zillow video premiering. It's probably going to be Sunday, but we'll see. So hope you guys take a minute to watch that, leave it a like. Appreciate everybody's support. We'll see you on the next video.